Hello and welcome to Rajya Sabha Television. You're watching The Big Picture with me, Frank Pereira. The economy seems to be on top of the Prime Minister's mind at the moment. Though recently the BJP President Amit Shah attributed the economic slowdown to technical reasons, the importance of a slowing down economy is not lost on the party or the Prime Minister Modi. The debate is no longer whether demonetization and GST have impacted the economy adversely. The debate now is what the Prime Minister Modi should do to kickstart the economy. There have been reports of the government planning to give the economy a 40 to 50,000 crore rupees stimulus. The stimulus can boost exports, encouraging domestic investment, supporting small and medium enterprises and providing more money for rural infrastructure and affordable housing. But the stimulus won't come without its costs. On this edition of The Big Picture, we will take stock of the economic challenges facing the Narendra Modi government. Joining me on the program today are A.K. Bhattacharya, Editorial Director of the Business Standard; Nitin Desai, former Chief Economic Advisor, Government of India; Dhirendra, Kumar, Head Value Research; and S.K. Jindal, Chairman, Investments and Capital Markets, ASSOCHAM. Thank you to all my guests for joining me on this edition of The Big Picture. So Desai, I'd like to begin with you first before we get into how the economy can be, kick-started, boosted, this booster dose that everyone's been talking about. Is the government's finances or the fiscal space that the government has, does it have any elbow room to tinker with?
I don't think so. It's this talk of a 30, 40,000, some people have mentioned 50,000 crores stimulus is a conventional fiscal stimulus, which means an increase in the deficit. I think that would not be very wise. There is one big difference now. The fact is that there is a very, very large holding of Indian government debt by foreigners, over $70 billion, $75 billion. And that is all carry trade stuff. You see, that is, they borrow at 2% or less in their parent country and invest at 6% plus here. There's a small exchange risk involved. Now, if they perceive, these are the guys, this is fairly hot money. It's not like equity. Equity, the people who from abroad who invest in equity are generally taking a long view. You don't invest in equity unless you can take a 3 to 5 year view. But this is very simply a quick money-making carry trade type activity. Now, if those guys react to an increase in a fiscal deficit or a decline, in the rapid decline in the exchange rate, remember we did have a big drop in 2013. Don't overestimate our capacity to control it. In 2013, the space of 3 months, you see the way the rupee crashed just before Rajan came in.
Yes.
And I'd say that, so I would be very cautious in interpreting the stimulus in terms of raising the fiscal deficit. Second, where is the evidence that pushing government spending and government expenditure is going to solve your basic problem, which is the absolute free or near freeze on private sector investment intentions? Investment is going on. Nobody stops 100%. So I'd say that they did it. Last year we did have a significant boost in public spending and public investment, but it has not stimulated private, which is still held back by many factors. Lack of demand growth, the NPA problem. And to me, the biggest problem is that the huge fall in investment in the non-corporate sector, the small sector, where their investment has fallen by 5% over the past 5 years, relative to GDP. It used to be around 15% of GDP, it has come down to 10%. And I think they've taken such a serious hit from demonetization and GST that I'd say that I would at this point not expect that just simply pushing in a larger deficit is going to kickstart the economy. You have to make policy changes which will make these things, resolve these problems. I don't think the answer is necessarily more public spending. I think the answer is certain fixes in policy, in the way GST is being implemented,
right,
etc.
When private investment is not kickstarting at all, Mr. Bhattacharya, what option does the government have rather than, pumping in more money?
Well, as Dr. Desai rightly pointed out, there are no quick fixes. You cannot expect to spend your way to growth in this current situation. Just to set the whole thing in context, the first 4 months of the current fiscal year, you have already seen enough stimulus happening in the economy, because the budget was passed well before time. The normally timing is May, but this time it was passed before the financial year began. So I was doing some calculation and I realized that you already have 2 lakh crore of extra revenue expenditure compared to the previous year has come into the economy, and around 20,000 crore of capital expenditure into the economy compared to the previous year. So if you are talking about stimulus, the stimulus has already come into the economy. Now, if this has not been able to give you higher growth, I don't see any reason why another 30,000 or 40,000 crore of more extra money will give you more growth. On the contrary, the message is make sure that your fisc is under strict control, because there are serious pressure on your revenues and on expenditure. 3 reasons. Disinvestment was supposed to be 72,500 crore. As of now, as we speak, it is the track record shows only 19,000 crore has been mobilized. 6 more months are left. Yes, the speed may pick up, but it is a big task. You have got 44,000 crore of spectrum earnings. That may well be a stretch. And then you have got the revenues coming from disinvestment, non-tax revenue, which is there's one more big item which is there, which will be dividends. RBI dividend is down by 27,000 crore. So you have dividend shortfall, you have got disinvestment shortfall which is threatening you, and then you have got the problem of your the spectrum auction proceeds. So if these are already exerting some pressure on your revenue side, I would say that we should not get into an adventurous mode and say that we go in for higher fiscal deficit and kickstart the economy. On the contrary, to answer your question, what we need to do is essentially look at your factor market reforms, like GST has been launched. You look at what kind of labor law rigidities are there which can be fixed, and sector wise you have got the textile sector which is in dire need for reforms. What kind of labor law changes can be fixed. Then you also need to look at your exchange rate policy, where you have the rupee which is clearly overvalued, and that needs to be fixed, because at least your exports are suffering for a variety of reasons, but surely the overvalued rupee is one of the reasons, and it is also impacting your local manufacturing, because the tradable import goods are not being manufactured here, but being imported because it is easier to import, because it's cheaper. So therefore, you need a variety of actions on various fronts.
A multi-pronged approach is what we require at this point in time. Yeah, you know, Mr. Jindal, as far as the industry is concerned, what does it expect from the government? What needs to be done as far as the economy is concerned?
Industry would like to see this kickstart of economy, because they feel the slowdown. But how it will be achieved is, as I look at, one will have to use all the tools available at their disposal, at the disposal of the government, very, very ably. A big fine tuning is required. For example, non-tax revenues, disinvestment, dividends which they come, expenditure push, RBI rate cut also to some extent, if they can plan it properly, handle it properly. Ease of doing business, labor laws is one thing to make business little easy. It is too heavy on them that business is not flourishing, but if some simplification is done, some rationalization is done, it can come up, it can create jobs also. So all those things, you will have to use all your tools to make the situation more efficient for you. If we don't do it now, it's a tight situation, and we must do it. Government must use all its tools at its disposal to fine tune the things so that results improve, efficiency improves, simplification happens.
Sure, you know, government has to use all its tools is what you're suggesting. Dhirendra Kumar, Head Value Research, joins us on the program right now as well. You know, Mr. Kumar, as far as the economy is concerned, what short-term measures do you see the government taking, apart from the stimulus that everyone's talking about? The media has been talking about it for the last 1 week or so. What can be done, do you think?
No, I'm not an economist who can actually suggest, but yes, the market, generally, the interest rate is one big thing which everybody has been anticipating, and more so as a stimulus. But I really wonder that, that is something which can be, we can guess that. And other thing which actually comes to my mind is, the simplification, the NPA problem of bank, which is actually a big speed breaker. It has been a serious impediment, and I think government gaining clarity and giving a clear signal in terms of what needs to be done, how they are going to resolve this, because that has held up all the NPA problem and the investment cycle to revive. I think government has done, as Mr. Bhattacharya was saying, that what has happened, or the government programs or the spending has already started, efficient implementation, or the advancing of the budget that has accelerated the whole pace. That all is done. And I think the biggest thing which is, I run a small business, and I can tell you from my own surrounding, and that is a general thinking too, that the big change that is GST, it is a huge blow to the business confidence, and I think that might be completely misplaced. Such a big change is bound to have great apprehension, but we have to see, and I think easing the problem and streamlining and doing it faster, and that I think is more of a technology challenge, that is more of an operational execution. And meanwhile, what has happened is that the tax fellows have their targets and they are getting after the people. The tax net has not been broadened overnight. The GST thing is going to be a very long drawn thing. How government reacts or is acting proactively will be a very material thing, and it will take time. Meanwhile, the pressure on to enhance revenue is causing another issue. That part, I think, from the market standpoint, I think market is waiting patiently for the economy to recover. There's a phenomenal amount of, the technically, or if you look at tactical situation, what has happened as a result of, the real estate crisis, or the general decline in real estate, the demonetization, the net effect of that is financial investments has really taken off. All savers are channelizing their investments into market. The interest rate, the decline in interest rate for savers, the decline in real estate, that has caused a different kind of disconnect in the market and the state of the economy.
Sure.
So markets are, the government is very lucky with the state of the market right now.
Okay, fair enough. Taking the discussion forward, Mr. Desai, would you say that the government has taken several bold moves over the last 3 years or so, but the economy still is the government's Achilles heel? Would you say that?
I would say it's not. Look, let's not also overstate things. That I don't think the economy is in sort of ICU as some people argue. No, it's a little ill, but it's not an ICU case as yet. And there are some green shoots. I mean, an economy which is truly in ICU would not see the sort of IPOs that we've had. This year will probably be a record year for IPOs. So let us not overstate the thing also. Yes, there are problems. There are expectations of high growth.
Very high expectations.
I'll tell you where I would start now. Let's focus on what can you do which will have, one, GST. I think the government should, all of us as economists have supported it, and perhaps at the first instance, the government should have focused more on getting the fundamental principle of a single tax rate across the country working. I think they overdid the thing with this highly complicated system of compliance, where your invoice and my invoice got interlinked, that I can't actually say I paid so much. No, it'll only come in if it comes in automatically when you file in, and all that sort of stuff. Matched. Then all the three things to be filed on internet, no paperwork, etc., etc. If I had been today, in hindsight, what I would say is I would have done it in phases. Started with a system which, in terms of actual operation, would have not have been very different from the old VAT system. You fill paper forms, you put in your claims, and that claim is verified against what somebody else has said, instead of this automaticity, which is, of course, very important. And I would have brought that in later. I think you can still do some of these things and relax the conditions which apply, particularly to the small sector, which is paralyzed. Let's be very frank. The big hit is in the small sector. I've seen a survey done on GST impact, and I noticed that very few of the big people are seriously worried. They have accountants and so on who are doing this work. But the small people are. And I would say that one immediate thing that would deliver is if they start relaxing the filing conditions for small people a little, with the intention that down the line, 2-3 years, we will bring everybody into the same integrated system. Don't overdo it. Why do you want to do everything in 1 year? Do it over 2-3 years. This is now, yes, there are some, the uniformity of rates we're going to. Second, PPP. The stimulus effect of public investment in infrastructure investment depends very much on the effectiveness of the PPP model. Now, the PPP model needs to be fixed. Part of the problem in fixing it is that a lot of the people you are looking to partner with are caught in the NPA tangle. But also there are other issues which are, particularly on risk sharing. They can fix that relatively quickly. In a sense, they've done it in one area, highways, and that has helped. That has clearly helped in getting investment back. Third, as he said, please correct your perverse exchange rate policy, which is hitting not just at exports, but which is leading to a flood of imports. You just look at the way imports have risen since November 2016. Just look at the numbers, and they're rising at the rate of, on a year-on-year basis at the rate of 20% plus. And you see this in the market. To talk to anybody, they'll say that the markets are flooded with Chinese goods. You go to Sadar Bazaar, what you see is Chinese goods, nothing but that, in very simple, elementary things. So fix your exchange rate problem. By all means, look at the interest rate, but do it gently so that you don't disturb the people who have brought in vast amounts of money into the country, particularly this year, because of the interest rate differential. And I would say these are some of the very immediate measures the government can take. So I'd say that there are things, don't overdo the panic. Don't do anything too hasty and too over-dramatic, but start fixing some of the problems like the GST problem, like the PPP problem, like the exchange rate issue, and so on. And I think you'll start seeing some results.
Sure. As far as the voter is concerned, Mr. Bhattacharya, do you believe that the voter is keenly watching the economy? Do you think it's going to be a poll issue come 2019? We're just less than 2 years away from the next general election.
It's a very interesting question because I think the voters are indeed watching what is happening right now. Let me look at it from a political economy point of view and not just strictly as an economy issue. What we have seen in the last 1.5 years is that the tax net has been widened. Demonetization caused a lot of disruption, a lot of pain. GST is a big reform, but it has been disruptive so far. The net result of all these actions on the economy, on the middle class, and when I say the middle class, I give you a number of around 7.7 million taxpayers who are in the tax bracket between 5 lakh annual income to 50 lakh annual income. Now, it is this tax community which is the most vocal, the voting community, and also probably contributing to the lot of anguish in the market that nothing is happening. We are undertaxed. The difference between the legit economy and the illegitimate economy is disappearing. So if the government wants to improve sentiment and by that address the voter concern, probably a little bit of concession is something, a tax concession to this community which did not get any rebate at all, in the last budget. Probably, to lift the sentiment is something that this government can consider, because the damage to the fisc will be marginal. It's around 3.2. If it goes to 3.5, probably the foreign investor will take note of it, but it will not panic either.
Right.
So if from the voters' perspective, this is an option which the government can certainly look at. I would not recommend it, But since you raised the question of the voters' sentiment, this is something that a feel-good factor can be created by giving some concession to that middle-class vocal community.
Keep them happy for the time being.
Happy for the time being at least. Number two, what the government can certainly do is push the public sector into more efficiency mode. Either they be given a clear task of they are now sitting on reserves of a couple of lakh crores of reserves in their kitty and they are not investing. Now government is a shareholder. Government should actually push these public sector companies, and at least but the fear that if you don't invest, then I will transfer this money into my kitty as a shareholder, where a special dividend will be forced on you. Instead of government taking the money, I would rather recommend the government should force these public sector companies to go out in the market and invest so that at least some animal spirit can be revived.
Yes, Mr. Desai.
Can I just quickly add one more number to what he's saying about the public sector companies sitting on 2 lakh crores? The total amount of money which corporations have invested in mutual funds, mostly liquid mutual funds, is 890,000 crores in July of 2017.
Right.
It has gone up by 60% in the past 2 years.
Yeah,
so indeed.
You need to revive that.
Find ways. Don't sit. It's not your job is not to sit on cash.
Absolutely.
Your job is to use
something
cash
productive with it.
To come out and invest in the.
Sure. Do something productive with it rather than sit on a whole pile of cash. You know, another major issue as far as the economy is concerned, or the general public, when you're talking about voting and the voters is concerned, Mr. Jindal, is jobs are not being created at a fast enough pace. Do you see that problem being addressed at all? Because that's going to, upset the voter as well if he's not going to get jobs.
No, that problem I've been telling that this is a part of ease of doing business. You see, you make business easy, then jobs will be created automatically. But as long as you don't address this labor laws thing, things will not happen. Labor laws, they have done some work on that. Instead of 40 laws, some 4 codes have been made, etc. But it is halfway in between. Clear-cut policy should come out. They can follow, if they like, Chinese model as well. There are so many other models also. Whatever best practices which suits us in India. Chinese model, I presume, will suit more because we have similar conditions. So that is very, very important, and we don't see big thing happening, big results coming without addressing the labor law thing. Second thing, from business point of view, the sentiments why they are not so well at the moment, main disruption is from GST. This confusion of 3 months has passed already. This is causing, we understand that the systems are not working, computer systems are not working at time, and you cannot reach them. So these things are causing lot of discomfort and confusion, and this needs to be handled, like Mr. Desai said, some manual procedure or some way to find solution
within the framework.
And within the framework, but for immediate situations, some solutions, you can always improve them later. You can see them happening as per your wish little later, but find out some solution of some manual refunds or something. Sure. Addressing the situation, not becoming very critical, because GST, when the money gets stuck, it is like oxygen being obstructed to the body for the business.
Sure.
So it has similar impact. So I would like that government, they are thinking, every day in the media we see that something will come out. It hasn't come out yet, but they are working on it. It should come out faster, then it will be better.
Okay, fair enough. A little bit of fine-tuning is required. No drastic measures needed for the time being is what our panelists are suggesting. Dhirendra, Kumar, there have been some positives as well. Some of the sectors seem to be doing relatively well. The automobile sector has done well over the last few months. We've seen cement too is picking up. So what are the sectors to watch out for really?
No, I'm actually a mutual fund guy. So, I always think in terms of diversification and, looking at a short-term view on the market. Market has its own mind, and, fortunately, the dynamics of the market has been very favorable. The foreign investors are excited about India for different reasons that, they only find it as an island of growth. Domestic investors, they have taken fancy to equity and equity mutual fund for a variety of reasons. Interest rates are low. We have seen the decline of real estate or preference for real estate as an investment avenue has come down. Gold is crumbling or struggling. So in that sense, a lot of things have changed and it has been very favorable. And also, the mutual fund industry has really taken a leap in terms of creating greater awareness and a large set of happy investors who are able to spread the word.
Sure.
I don't think anybody should bet on a sector. I think things which are, and markets are very cyclical, or the market's preference for sectors actually are so cyclical that by the time you form a view, things would have changed, and it would have changed by the time you actually start expecting it. So investors should take a slightly moderated view. A lot of things have been out of favor. A good part of the market has been very cheap. Has plenty of opportunity in the market for all kind of investors to venture into.
Okay, all right. On that note, then I'll have to call it a wrap on this edition of The Big Picture. I'd like to thank my guests, A.K. Bhattacharya, Nitin Desai, Dhirendra Kumar and S.K. Jindal for joining me on the program and putting things into perspective for us. That's all the time we have today. See you again next time.